James, we had a great interview today with Jeff, don't you think? I mean, that was something that I had never really considered before, but it's a real stumbling block for a lot of ISOs and agents.
Yeah, it is. It's interesting. It's like anybody that's sold a lot of merchant accounts in the field, especially this idea of instant onboarding of the merchant and, really simplifying that process is like something you've been thinking about your whole life, but it seems like, because it's like, oh my goodness, if only this could be easier. So I love what Under is doing, and I love what Jeff's doing there as, really streamlining this. And then tell us about the Insiders Report today.
Well, we have an update on crypto, and I as we've said before, this is crypto payments at the point of sale are coming to a merchant near you if they haven't already. And I have some interesting insights that I share with everybody. Yeah, and I think over the next couple of years, the scary thing is crypto acceptance is probably coming to your merchants. So, are you going to be providing that to them, or is another payment provider going to provide it? Don't worry, I'm sure they won't try to sell the merchant account as well. Right? Watch out. Yeah, watch out. Exactly. And then in the questions from the field, I talk about just some really simple sales advice to kind of audit your prospecting approach and talking about how to get the merchant talking and really to present yourself sincerely and to really get that best foot forward right at the beginning of the conversation. This episode is brought to you by Accept Blue. The website is accept.blue. Accept.blue. It's a processor agnostic gateway that is really focused on having streamlined pricing without any percentage or per item fees to the ISO. So they have streamlined pricing and really a streamlined system. It's a simple system. It's white labeled. It's 100% built for ISOs and agents. So if you haven't checked it out already, definitely go to accept.blue and check it out. It's a really interesting gateway to take a look at. So you ready to go, James? Let's start.
Let's do it.
Welcome to the Merchant Sales Podcast.
Hey, everybody. I'm here today with Jeff Shea, and Patty and I are going to be talking to Jeff today about instant merchant onboarding and this idea of kind of the underwriting process and these legacy systems that really need some updating. So Jeff is the co-founder and CEO at Under.io. How are you doing today, Jeff?
I'm doing great. Thanks for having me.
Awesome. Thanks for being glad to have you. So Jeff, before we dive into this really interesting topic, give us a little bit of your story. This is such a crazy industry. Patty and I are always so interested to hear, how did people get into this business? So how did you get into the payments industry? What was your journey to Under.io? And then maybe you could even give us a little context of why you co-founded this company and what it's all about.
Sure, absolutely. So my whole life, I've always been an entrepreneur, but I definitely didn't grow up with a background in payments. I feel like I kind of accidentally stepped into the space through just a series of events that happened with some of my past businesses. But I got started in payments about 16 years ago. Originally started as an agent, which is, I think, kind of the starting place of where a lot of people get moving from the space. We very quickly grew into an ISO and then a payment facilitator. This was back before that word existed. So I think we were called an aggregator at the time.
Yes.
And we focused on a lot of vertically integrated software companies, business to business. And it really just kind of drove our need to innovate because we knew that we couldn't solve our customers' needs with what we had. So we had to create new solutions. So spent about 16 years running that business, had a really successful, engine as we built the business, and then had an exit in 2017, which led to starting Under, what we're going to be talking about today.
Awesome. So let's dive a little bit into that. So of course, Under is this idea of, automating merchant onboarding and different things that you do, which we'll get into the details. But what I'm really curious about right now is when you look back at your own experience in the industry and you look around at kind of these legacy onboarding systems, the PDFs, the paper applications, whatever, right? When you look at that, Jeff, what are the pain points that you see for both agents and merchants that, really prompted you to co-found Under to try to solve some of these problems? Like, what are you seeing in the market that really you saw that need that needed to be addressed?
Yeah. So related to what I was just talking about before, I mean, there's two sides of this puzzle, right? You have the merchants, which I guess we're talking about as the consumer. And then you have the ISOs or the processors or the agents who are the ones kind of acquiring those services. So from the merchant perspective, it's really a matter of time, right? It's very time consuming to fill out a financial services application. They're often very confusing. It's not very clear. And then when you go through that process, there's then more time for underwriting and follow-up and pen management and all of this. So, I think that's the biggest pain point I would think of as a merchant is they make a decision, they want to move forward quickly. They don't want to spend time to potentially end with a negative outcome. On the acquiring side, it's interesting because since I started in the industry, and I know it was different, obviously well before then as well, these applications have just become more and more confusing. We've kind of thought of it internally as this idea of additive underwriting. As there's more fraud, there's more things put in place to offset that fraud. And this pattern has continued for 30 years. And there's never been any reductive processes. So these apps have just gotten longer and more complicated and really messy and hard to deal with. So there's a bit of learning that the ISOs have to go through. There's a lot of time on their side working through the process. And there's not a lot of interchangeability. And I just think as businesses are evolving, it just seems like native banking and financial services are often the laggards in allowing those businesses to accelerate in the way that they want to. So, we're really interested in trying to remove those roadblocks.
Actually, that's really interesting, Jeff, because it seems to me that, in the 16 years you've been in this business, it's a great perspective. Because in that period of time, new competitors like Square and Stripe have come onto the scene, and I'm wondering, what the impact has been in terms of merchant expectations for onboarding as a result of these new competitors.
Yeah, that's a great point. And without a doubt, Square and Stripe, but it's not just Square and Stripe, right? I feel like it's the demand economy in general that has absolutely changed merchant expectations, as well as the fact that we as a nation are simply more comfortable with computers. It's our generation, when I was a kid, where you were warned not to buy things on the internet because it might not be secure. You didn't know who you're working with. Nowadays, I can't remember the last time I went to the store to buy something, right? There's been the whole mind shift. So, I think another really great example people always come back to is Amazon, right? There's this transition of buying something on the internet, entering your address, your email, your credit card number, et cetera. That takes 5 minutes. So Amazon said, let's just eradicate that and make it take 1 second. And by saving people 5 minutes, they've created this huge transition of customers buying there. And now that's the new expectation. If you go to a website to buy something and you're presented with this, long form that you have to scroll on, you might abandon and go somewhere else. So long-winded answer, but I feel like that's where financial services have come. I feel like because of this, people now expect to get their bank accounts instantly. They expect to get their credit card accounts instantly, payroll accounts, insurance accounts, because there's good examples of how this can work in an efficient way.
So then, how is Under.io helping ISOs, create a merchant experience that's similar to these PayFacs?
So from my first point that I mentioned before, I think a lot of the vision of what we're doing stems from the demands of the type of customers that we used to work with in my previous company. So what we've decided to do is we built a technology platform that enables financial services companies and banks really to compete in this new landscape that we live in today. And we see this as there's essentially 3 fundamental layers of what you need to do to be able to be into this space. The first is what we call data collection, right? So how are you getting the information from your customer that is necessary in order to move forward with some type of a process? And with our platform, we've developed online web forms and a variety of different mobile forms to allow people to kind of collect that information. I could talk a little bit more about that as we go. The next layer we call our synthesization layer, which is now that you have all this data from your customer, how do you make sense of it, right? How do you shrink the top of the funnel? How do you actually, ultimately at the end of the day, decide who of this pool of customers should be your customers, right? Those that fit your underwriting guidelines, those that are not fraudulent, those that truly apply for the services that you're looking for. And then the third layer is our integration layer, right? So now you've deduced who your customers are, you have all their information, and you want to do something with it. You want to open a payment processing account. You want to build their gateway. You want to get them a loan. You want to do something of that nature. So for us, it's about then taking that data and then ideally APIing it to the location that it needs to go. So those are the macro concepts of what we do in our platform. And like I said, I can dig in as we go today in a little more detail if it's helpful.
Love it. Love it. So let me see if I can just zoom out for 1 second here, Jeff, because I mean, I think for our audience, it might be beneficial for them to understand, so as like an individual agent, let's say, right? Let's take that for a moment. So I'm an individual agent. I walk into a merchant location that I've had a conversation with, and I get them to agree that yes, they want to sign up for a payment processing account with me, right? So the way I'm doing business today, I'm pulling out my tablet maybe, and I have, I'm pulling up maybe DocuSign or some similar experience and filling out this long form with the merchant and all of that. So just if you could give us the 30-second visual here, how is my life different? How is my experience different as a sales agent if my company is using Under?
Yeah, I think the biggest point that I can comment on here is just what we tried to do is to change the experience to what I think merchants are now expecting, right? So if you want to apply for something, anything on the internet, you're not expecting to get a 20-page PDF that you have to figure out how to fill out, right?
Right.
You're expecting to land on a form to collect your information. Right. Mm-hmm. So the first thing we do is we give our teams the ability to almost eradicate the documentation fundamentally and to present their customers with something that's really simple to fill out. So they would present them with a link that they could access on their phone. They could put their tablet in front of them. They could fill it out on their tablet. But the merchant's now filling out a web form where it's asking really simple questions: your name, your address, your business information, all the complex things. There's roughly, from our count, about 250 different endpoints on your average merchant processing app. And we've been able to reduce that to about 25 to 30 questions that by answering these questions ultimately can deduce what goes in those 250 endpoints. So the customer is presented with a form that they fill out. And then they can also use our integrations to kind of improve the process and further eradicate some of the things that they need. Behind the scenes, we still do all the magic. We still populate the PDFs and all those logistics that need to happen. But now you're creating a much faster experience to get something completed, and ideally automating a lot of the back-end things that would happen afterwards. Because then an agent would leave, go home, type this into an app. They would, or if they didn't already have it in an app, then they'd have to either email it or log into their onboarding system, type it into the onboarding system. There's still like multiple steps that happen after that appointment happens that adds time and delay to the process.
Right. And what you're saying is Under eliminates all of that because they fill out the forms on the spot potentially. And then by filling out the forms, that's going to then do all the back end stuff of creating the PDFs and, populating all the necessary fields that are needed.
Yeah. So just so I'm clear, it's like, so what you're asking on that web form are the basic data points that then will populate those forms. Is that what you're saying?
Yeah, that's right. And I mean, we're flexible in the fact that it depends on what the use case is of the customer, but let's assume it's the standard use case. You need a PDF form filled out, you need a voided check, you need signatures, and you need to send it somewhere. Our system will automate all of that. We'll collect the data. We'll make that process simple and easy for the user. We'll then automatically create the PDF, automatically email it to the merchant. We'll then collect the supporting documentation, and we'll integrate it to the processor so that at the moment the customer signed, it's actually in underwriting, right? And there's no other steps that need to go along that process.
Well, that's a perfect segue, because what I want to talk about next is, as you're coming into this as, an innovative technology company that's streamlining this, and I think everyone on this podcast would agree that the end goal would be this like instant, onboarding, right? So hopefully it's like, I sign them up, we talk a little bit longer, and while we're talking, we get a notification that says their merchant account is live. That would be great. And obviously that's not going to happen for high risk or even medium risk, but for low risk and things like that. And that is the experience that people are getting on Square. That is the experience people are getting on Stripe. So my question though is, are there external barriers here? Meaning, you integrate with FIS or Fiserv or TSYS or whatever. Well, their underwriting processes could potentially like slow this down. how do you see this playing out? Do you see big players like that getting to the point where Under could actually provide, instant onboarding? And just how are you working through that to like really improve the process, with these larger kind of legacy companies that are potentially slowing the process down for everybody?
Sure. Yeah, really good point. And there's two sides to this, right? So there's automating manual processes, which
Right.
I feel like we have end to end covered. But then there's automating underwriting, right? Which is possibly bringing in other players. So if you're an ISO who rolls up to Fiserv and you're a retail ISO, you're not doing your own underwriting, you obviously can't automate someone else's underwriting process, or at least today you're at the mercy of their underwriting process. So our vision is that we'll be able to use our software to help create that solution for everyone. But you have to keep in mind as a retail institution that you have to, guide by the underwriting policies of the processors that you're working with. If you're a wholesale ISO, it's quite the opposite. We would help to dictate and create your underwriting policies. At the end of the day, humans are just making decisions based on a plan of action. If you've seen underwriting guidelines, they're relatively easy to follow, right? Mm-hmm. There's if-then statements, and based on volumes and industries and type of products and all of these things, there's all these different things that are required. So we believe we can automate that and truly create an instant onboarding solution. And then we can make the process much more friendly for those that are retail that still have some loops that they have to jump through as they're working with their processors. And I think it also depends on how you think of where you're managing risk, right? Because the big difference to me is when you're applying at one of the traditional processors, most of their friction is up front, right? We don't want to let a lot of people through the door. We only want to approve customers that should be with us, which is quite the opposite of what people think of with many payment facilitators like a Stripe or a WePay or something like that. They want to let as many people in the door as they possibly can, and then they want to use their algorithms and machine learning to weed out those that shouldn't have been there, because it's more about the user experience than it is the post-approval risk management. So there's ways that you can design your underwriting policies to work in either way, and it could help account for that. And then obviously the industry you're in or the type of customers you're working with may, push you in one direction depending on what's most important to you.
Interesting. Okay, so I think our audience now has a really good idea of what you do, which I think is great. So let's dive into the details a little bit. So there's kind of three different areas you mentioned. Let's start with data capture. I know you've already given us a lot of really helpful information about how that works. So let me kind of rephrase this question a bit. So when we think about data capture, even 25, data points is, that's still that's a really big form, right? So how exactly does this work? I'm assuming you have it like split up on different screens. Is it a step-by-step process? Like, give us a little more specifics of like how the data capture would work. And specifically, I'm interested in, the difference in the experience between if I'm selling over the phone or I'm remote and I'm sending something to the merchant to do versus I have an iPad and I'm out in the field and I'm physically standing there with the merchant. So could you maybe talk to that a little bit?
Yeah. So we briefly touched on this in one of the previous points. I think the first step is just simplifying the number of questions, which is resulting in time savings, right? So an average merchant processing application is 250 questions. And if you just email that to a merchant, other than their eyes kind of bulging and not knowing what to fill out or what they're even responsible for, there's a lot of fine print and concerning language and things that add more pressure to this. Yeah. So the first step is we went through every app that existed. We built out a huge graph to kind of deduce the questions, and we tried to come up with what we call root questions, right? So a really simple example of this is First Data may want to know the date that your business opened, yet maybe FIS wants to know how many months and years you've been in business, right? Two questions that ultimately can be answered from the same question, but could be a different input for these applications. So we tried to come up with what the core amount of root questions were that could ultimately respond to most processing applications. And that's what allowed us to get from 250 down to about 25 to 30 questions. So then how do we go from 25 to 30 and get it down to even less than that or even further less than that? Well, one of the main things is through our integrations. So for instance, instead of entering your account number and your routing number, you can instead log into your bank using Plaid and we can pull all of that. We could pull your banking data, your average transaction, your voided check, and history of statements. So there's different services that can help us to even further cut this down so that it's a better experience for the end user. And ultimately, over time, once a end user is a customer of Under, we've securely stored their information, and they will then be allowed to grant that access to someone else. So if the merchant has applied at TSYS and decides they want to apply somewhere else, they could repurpose that data, similar to what you see with like a Keeper Security or a LastPass or those types of password security processes. So that helps us to get to a place where really our vision is in the future, where you're applying for something with a facial recognition or a thumbprint or something of that nature, and you're not entering any data. We're not quite there yet, but that's ultimately where we think we can get. And then to your other question about kind of the use case, everything to us kind of centralizes through the same process. So if you're on the phone, you're either pre-entering some of the data, because you probably can collect a little bit of information from your customer, and you're sending them a link that only requires the things that you don't have for them to fill out. The process would actually be the same in person. There's not multiple solutions. So you're still pointing a customer to a link that they can fill out on their phone or on your tablet. You just happen to be there with them to possibly collect some more of that data.
Interesting. One of the just side notes here that, as I've talked to different payments executives about these processes, one of the concerns that they always have, and I don't know if there is even a solution to this other than honesty, but just curious your thoughts. I'm sure it's been brought up, but when an agent's out in the field in person, they're using their own device. How do you keep the agent from fraudulently like filling it out on their tablet in the car after the person says no? Or you know what I mean? Like, there's a little bit of a concern of like, oh, the agent's just gonna like fill out multiple apps for different processors to get multiple upfront bonuses, or kind of more the fraud on like the agent side. Again, maybe that hasn't come up, but I'm just curious if you have any thoughts about that, or if that's been a topic of conversation.
No, it makes sense. I mean, I think the way we've designed it helps to reduce that as much as we can, right? So instead of agents filling out some form and then uploading it to DocuSign and then sending it for signature, everything is still designed and developed within our platform. So when they're with the customer, they're essentially filling out the form that the customer would have been filling out had they emailed it to the customer. So at least all that comes into our system.
Right.
And then when a customer actually signs, right, we then flatten that, add a cryptographic hash to every page, and embed their signature. And then at that point in time, that document can no longer be changed. Nothing would stop an agent from coming back and saying, oh, whoops, they said that they were Moto, but they're really retail. So we've got to make this change here.
Right.
But then that would actually void their signature. So now they would have to get yet another signature, because otherwise you have no way of avoiding fraud, right? And it's an interesting question, though, because today we always try to relate back to what's happening today. Well, technically, nothing is stopping an agent or an ISO from taking the PDF, opening it up in Adobe Acrobat, and editing it, right?
Sure.
So there's always ways around the process, but we try to limit it as best as we can.
Yeah, no, I like that. Now, one other piece that we really didn't touch on that I'm curious about, more for my own curiosity from our statement analysis company, but as far as pricing, talk about that a little bit, because obviously, the most confusing part about an application, at least in my opinion, is when it comes down to pricing. You've got these companies that they built these merchant applications to support tiered pricing, flat rate, 3-tier, 4-tier, and 6-tier, cash discounting, surcharging. It's like, oh my word. And they put that all into one application. How have you dealt with that? Have you been able to kind of, pull any kind of, trends or things out of that to make it a little simpler, or how are you dealing with the pricing aspect?
Yeah, it's a good question. I mean, this is related to the same comment before, where these applications have become additive.
Yeah.
I think it's interesting is when I started in the industry, I always assumed that there was some really smart PDF guru that has a bachelor of science degree and documentation that works at a processor that's created this legal form, but that's just not true. Someone someday 40 years ago made a PDF and then put all the inputs of what they needed, and then a new product was created and a pricing form came out and a new terms and conditions happened, and they just keep getting jammed into the same documents, and they're not created as thoughtfully as you would think, right? So that's what adds to this complexity.
Sure.
So, and as most of these, varying pricing methods were really just a way to manipulate customers to charge them more and make more money off of things. So at the end of the day, we do think we make it a lot easier. If you think of a web form, right? So we've simplified pricing. So our customers can choose, first of all, what pricing you even want to use. Even though First Data has bill back and all these complicated solutions, a lot of ISOs don't even use them. So maybe they only want to offer their agents to use tiered and interchange, by example, and then we'll populate the data where it wants. Maybe they do want to offer them all. We can do that as well. But again, the way that the team is filling out the form, no one's ever filling out the PDF. You're filling out a web form. So you're in the pricing section. We can design it. We can move things around. We can limit things. And then at the end of the day, whatever the resulting value is, we know where that goes. So we just put that where it's supposed to be on the PDF. So it allows us to be really flexible.
That's fantastic. Yeah, I love that. So basically you've kind of standardized the pricing, it sounds like, as well, to where it's more the idea of choose which kind of pricing template or pricing structure that you want. And then here are the fields that need to be filled out based on the pricing structure that you've chosen. Is that kind of what you're saying?
Yeah, that's right. And I mean, it's not to get too complicated on this call, but we call these default fields, which are just fields that are usually adjusted by the sales group, not by the merchant.
Right.
So one, they can design what level of complexity they even want to see to avoid having issues. But most of our customers create templates. So they come in and they create a template for their retail customer. They save it. They create one for their online customer. They save it. Maybe they have a ISV who's an association with custom pricing. They save it. They create 5 or 10 like starting point templates, and then they build all their applications off that template. So when you have a new customer who's retail, you start with the retail template. A lot of the boundaries are defined, and then you're just going in and maybe changing the interchange plus amount or something else. So you don't even have to go and like start from scratch with everything. But they could, and then at least by starting from scratch, the process is still hopefully less complicated. I mean, as much as we've dug into these apps, I feel like I'm continuing to learn things. And I thought I was an expert after 20 years in payments, but you just find that there's a lot in there and it's not always clear.
Yeah, I love it. It is interesting. I was talking to one of my employees yesterday. She handles our kind of more advanced statement analysis stuff, building out, matching automation rules for categorization and all this stuff, and I was talking about recently I spent like 3 days in a hotel room in my local area just so that I could build out this big automation that I needed, and I needed to like get away and focus on this. Well, I thought there's nothing I'm going to see on a statement that I haven't already seen. I mean, I've literally seen 10,000 statements. I mean, come on, like I know everything,
Right.
And it was unbelievable how many times I found myself online Googling and like, what is that? And trying to figure it out. And, it might take me 30 minutes. And I'm thinking, good night, if it's taken me this long, I've been in the industry all this time and I've seen all these statements, So it's amazing the amount of complication that has intentionally or otherwise that's been created in our industry. So I think it's exciting that companies are starting to let's see if we can eliminate some of that, or at least the perception of it, so that's exciting. So I don't really, the other two I was going to go through, we've already gone through, to clarify, I mean, obviously, as you mentioned before, ISOs do need to have PDF documents on file. The underwriting department wants to have a signed, a digitally signed PDF document. And I think what you said was, yes, you create those and you can send those along with your API through the integration so that everybody that needs a copy can get a copy. Is that right?
Yeah, that's right. And we've had to get these processes approved by Fiserv and FIS and Global and all the above. So it's been a thorough process to make sure that the way in which this is done abides by their compliance policies, demonstrates and presents things to the customer at the time they need to see it, gives them access to the physical documents and the terms and conditions. So that's all there. And most of our customers use that. But we also work with payment facilitators or different banks who don't arguably need the documentation. So then, that's ultimately over time, we feel like that will become less relevant, right? It'll be more of a digital copy and imprint of what that is. That's going to be more necessary.
Sure. And then just to clarify the integration piece, and again, you just touched on it a second ago there, but the idea is for those that maybe haven't caught on to this yet, if an ISO came to you and said, hey, we want to use you for our online application as well as in person, so we want to really streamline our onboarding process here and make it as fast and simple as possible. If they're selling with FIS or Fiserv or TSYS or whoever, most of the big companies now, if you don't already have it, you're working on it, but you have integrations directly to their underwriting department so that when an application is completed, it instantly goes to the underwriting department, eliminating any delays that might currently exist where they're data entering it or whatever they're doing currently to get it into the underwriting department. Is that accurate?
Yep, that's accurate. And the one thing to be said is not all integrations are created equal. We found some really interesting things with the way the processors have done their integrations, but at least most of them do have a way to get the data. So that's absolutely right. What we're really excited about as we finish up the processors is starting to get into different solutions that can further enhance the business, right? Because it's not just processing. You have a customer apply for merchant processing. What do you typically need next? Well, you might need a gateway. So can we just automate building that gateway instead of having to log into NMI or somewhere else to go do that? That's actually quite simple in comparison to the processor. Yes. What if you want to give that customer a loan? Can we create your own Square Cash? That's actually quite easy if you just do an integration into a Lendio or a service like that. So we think it'll allow them to expand into different services that'll make this much more agnostic across different industries.
Yeah, I love that. I was going to bring that up actually, because you had mentioned it earlier. I'm glad you brought that up again, because, I think it's really important for our audience to understand that. I mean, this under is not like about merchant applications and streamlining them. That's one of the things that you do. But the idea is really more, correct me if I'm wrong here, it's that, hey, now we have that merchant's data and, they've already become a part of this kind of ecosystem. So now when you want to sell them extra services, and a lot of it too could even be things like, terminals, and some companies still doing, leases on larger point of sale systems or whatever it is. But the idea, I think the vision you had is kind of long-term, automating a lot of that. So I really love what you guys are doing. I think that's definitely something that's needed in the industry. Are you getting ISOs already that are doing that are starting to branch out a little bit and use different services?
Question. Yeah.
Yeah, we are. And as I mentioned this before, I mean, we're still a relatively young company since I'm not that many years away from my last business. So we're kind of at the mercy of our engineering team's effort to get these integrations in. But I think that's what we're most excited about, and what our customers are actually most excited about as well, right? It's not just, how can I speed up the process of getting an application in? How can I fundamentally change my business to have a better comprehensive solution, create a world-class onboarding experience, and become more of a dynamic financial services company, not just being pigeonholed into merchant services.
Yeah. Yeah, well, I think I can speak for a lot of the ISO owners that I know that might be listening when they would right now be saying, where have you been all my life? So, right, as they're trying to get their online applications done, and they've compromised again and again. And so I think your service is definitely one that's needed. So, for those in our audience who want to learn more and they want to find out how they could work with you, where would you send them to learn more?
Yeah, just our website is probably the best first start. The name of our company, again, is Under, UNDER. The website's under.io.
Awesome. So they go there, and I'm assuming you got some kind of a contact us or partner link or something like that they could go to, right?
Yeah.
Yes, for sure. They can learn a little bit more and submit some info and talk to our team. We can go through some demos and go from there.
Yeah, I was on your website earlier before this. It's pretty clear that it's just for ISOs, and immediately you can click a button and get more information.
Awesome. Well, Jeff, thank you so much for taking the time today. Really insightful information. I know our industry is excited to see how it goes and start taking advantage of these efficiencies that you're going to bring to the industry.
Yeah, good luck.
Yeah, thank you both. Appreciate the time.
So, Patty, one of the things I love about our sponsor, Accept Blue, is that their gateway really has this focus on ACH. And I know that's something you're passionate about.
That's something I'm passionate about, yes. And, and the whole idea of ACH payments, we talk about B2B a lot, and about how B2B has been dominated for years by checks. Well, the ACH is nothing more than an electronic check. It clears a lot faster, there's no float per se. And, I've looked at ACH a lot and wondered for years why more merchant services providers were not offering ACH. And I think it's basically because there haven't been solutions out there.
Yeah, the technology just hasn't been there to make a big push for it.
Right. But I think Accept.Blue really comes to the table with something that's going to make a difference.
Yeah, and then really taking it to another level, of course, is this idea of kind of the non-cash adjustment type program where they're bringing that to card not present with ACH and saying, hey, the ACH option, you can have no fee on ACH.
Exactly.
And so now all of a sudden that's kind of the cash equivalent. So those that are selling cash discounting, if you want to go to maybe contractors or other card not present merchants and sell something similar, go to accept.blue and you can talk to them about how you could set that up and structure it so that you could have your non-cash adjustment type of fee on the card transactions, but then not have it on the ACH. So I love it. I think it's pretty cool. So again, just go to the website. There's no .com or .net or anything. It's just accept.blue. Go check it out.
And now, here is questions from the field with James Shepard.
So Patty, today I just have a really quick questions from the field. I just want to encourage people to, sales individuals to audit their sales process to ensure that they are getting interaction and conversation from the merchant initially. This sounds really obvious, but as I think about my own training content, and I say, if you watched all my videos, what would you not get from my videos? What would be really important that you would miss? Well, what you would miss is what the merchant says. It's the conversation. And when I go out with top salespeople, when I'm making sales, what I'm seeing is there's this whole thing that happens prior to the opening pitch. And it's something that it's hard to explain in a training context, but it's the idea of getting that merchant to open up, getting them to talk. And so I thought I would just give 2 really quick tips today that might help. My number 1 tip here is learn to love sincere silence. Learn to love sincere silence. Not silence because you don't know what you're talking about or awkward silence, but sincere silence. So, a sincere silence is just walking into a merchant and when you walk up to them, understanding that, you're probably not going to lose the sale by something you didn't say. Right. You're going to lose the sale because of something that you said. So choose your words carefully and don't use too many. Right. Just saying, hey, how's it going today? That's a good start. You don't have to say, hi, my name is James Shepard. I'm here to talk to you about your payment processing needs. Did you know that you could eliminate your payment processing? It's like, whew, slow down, easy killer.
I mean, it's all about contemplation, isn't it? I mean, when you enter a relationship and you're, getting to know people, there's a pause for contemplation. Hi, I'm Patty Murphy.
Right.
Oh, Patty Murphy. Yeah. Okay. You think there's a thinking process, right?
There is. Yeah. And so, using that sincere silence, right? Whether it's right off the bat or when they say something, and a lot of agents, salespeople I talk with, it's like, I can tell when they're on the phone or in front of a merchant, they're very nervous about what they're going to say next. Did you know that actually the best thing that you can do is to actually skip a beat after the merchant finishes what they said and skip a beat as you figure out what you want to say? Right. That actually doesn't make you a bad salesperson. That makes you seem sincere. I honestly never have to think about what I'm going to say anymore to anybody. It's like when I'm in a sales environment, anything I'm selling, I've been selling it for a long time. I know how to sell it. So, but you know what? I pause anyway, just because I want them to think that I don't know what I'm going to say next. Because if they think I know exactly what I'm going to say next, I'm just another salesperson. So when they say something to me, I'll pause and, look, I'll get a sincere look on my face and say, wow, that's a really good point. Let me think about that a second. Here's what I would say. And then I go to my line that I could have said instantly because I knew what I was going to say, but I pause on purpose. It's intentional. So learn to love sincere silence. And then number 2, learn to mirror your prospect.
Yes. You talk about that a lot when you talk about it, when you're doing your sales training, I've noticed, right? Yes. That whole idea. Yeah.
Lately, it's taken on new meaning, primarily because of Chris Voss, who I mentioned on a couple of previous episodes. I love his negotiating tactics and things for a sales context. But, I'll talk about both of them. So in general, mirroring simply, means that you have an understanding that people generally like other people that are like them. Right. And so one of the reasons that you need to get the prospect talking initially is because you need a little context about who they are. How do they talk and what are their what's their mode of operation? How are they saying things and their tone and the speed and all of that. And, you're trying to mirror their personality a bit. And this is one of those things that's difficult to learn because the first 50 times you do it, you're probably going to feel a little mechanical. Awkward, and you're going to feel a little bit like you're not true to who you're yourself, when you do it the first few times. But think of it like an actor, an actor is playing a part, and that doesn't mean that they're being dishonest. No. They're intentional and sincere, and they're playing a part. And great actors are almost indistinguishable from the character that they're playing. Right. And it's the same way with great salespeople. When you're talking to someone who talks slower, you're talking slower, different hand gestures, and figuring out how dominant you're trying to be versus the other way. So there's a lot of that goes into it. The other kind of mirroring is, again, from Chris Voss, the idea of actually mirroring, which is mirroring the language, which is repeating the last 1 to 3 words that someone says in the form of a question, which gets them to open up. And so when someone said, you say, how's it going today? Well, I'm just trying to get this inventory order done. Inventory order? Yeah, we got an inventory order in today and we're trying to get them all on the shelves, but one of my employees is out sick. It's been a crazy day. An employee's out sick. Yeah, it's this COVID and what you're doing is you're just repeating those last 1 to 3 words, mirroring them back to the prospect. And it's creating conversation. People cannot help but give you more information. You can use it in a casual context. You can also use it when you're trying to get information about their payment processing needs and saying, what's your experience been with payment processors so far in your business? Oh, we've had all kinds of problems. Problems? Yeah, the last one, and right. Oh, they didn't call you back. No, they didn't call us back. And so you can just mirror and get as much information as you need. So that's really important, but it's also important to mirror in terms of the other aspects as well. When it makes sense. Of course, we're not trying to be an automatron or something and exactly replicate someone, but make an adjustment.
Use your own brain to figure out,
yes.
Okay, this is the situation where I do that,
Yeah, that's what good sales is all about. So take those tips, audit your sales process, ask yourself, number one, am I getting the prospect to talk? Are they saying things before I'm saying things? Before I'm figuring out what I'm going to say, are they saying something? Do I seem sincere in my response? Or does it sound canned? Does it seem pre-prepared? And then number two, are you making an effort to mirror the prospect in ways that make sense for you, staying true to who you are, but making slight adjustments with maybe the tone and speed that you're speaking, your gestures and things of that nature to mirror the prospect and to set yourself up really to have the best interaction possible and really just help them to have a great day. So hopefully those tips will help you. I hope you have a fantastic rest of your week.
Thanks, James.
This is the Insider's Report with Patty Murphy.
Well, I've been researching, James, the crypto payments market for an article I'm preparing for the Green Sheet.
Okay.
So I want to share some of what I've learned this week. First of all, a study by Site Research for the digital payments company Cantaloupe. Very strange name, if you ask me, for a payments company. It was formerly USA Technologies, which I'm sure a lot of people know about. They do like the vending machines and things that, card acceptance for that. Anyway, that survey revealed that 2/3 of consumers who own cryptocurrencies would consider using them for purchases if their crypto assets were stored in a mobile wallet. Nearly 1 in 5, 19%, would pay with crypto from a mobile wallet if it were easy to do so. Now, Visa's research provides an even more optimistic outlook for crypto payments. It says 81% of crypto owners, according to its research, are interested in making payments with crypto-linked cards.
Yeah.
Now, to put this in perspective, according to the Pew Research Center, about 1 in 6, or 16% of adult Americans, own or have owned cryptocurrencies. So basically what Visa's saying is 80% of 16%, which is, 12% or something like that? So 12% of adults. But still, that's it's a tidy number.
Right.
Now, so far, most crypto payment activity has been with online merchants like Microsoft and Overstock. But major brick and mortar merchants are getting into the game. Home Depot and Starbucks are two that I've come across. Visa and MasterCard cards that are linked to crypto accounts have been around for about a year or two, and most are linked to debit cards.
Right.
For example, there's a MasterCard debit card and app issued by the crypto wallet giant BitPay. Now, Visa says that more than $1 billion was spent using crypto-linked Visa cards in the first half of 2021. By early November, that total had grown to $3.5 billion, according to the website TechCrunch.
Wow.
And most crypto activity to date has been in the Asia Pacific region, but I think these are going to start popping up in U.S. checkouts as soon as well. In fact, BitPay has a partnership with Verifone, which will soon allow Verifone to support cryptocurrency acceptance at merchant terminals and for e-commerce in-app payments. The solution requires Verifone's Engage device or an Android device connected to Verifone cloud services. At the checkout, the consumer selects their preferred crypto wallet on the POS device. Then they scan an on-screen QR code using the wallet to complete the transaction. The cryptocurrency then gets directed immediately to BitPay, and once accepted, the merchant gets an approval message. The time lag is akin to a credit card authorization. At least that's what Verifone execs have told me. Now, BitPay then immediately converts the crypto to dollars, and funds get settled to the merchant account just like a card transaction, typically on a next-day basis. Verifone and BitPay, of course, manage all the volatility through this instantaneous conversion process, which is a big advance from previous iterations of crypto payments. The whole thing is an improvement, because those previous iterations required consumers to actually convert their crypto assets to dollars or yens or euros before they could actually spend the assets. As I uncovered these facts, I kind of thought back to the early days of mobile and contactless payments, James. These languished for years until the pandemic created more demand for less touch payment interactions.
Right.
And crypto, I think, it is in a similar position. But crypto cards are not going to languish for years like mobile and contactless, because cryptocurrency assets are burgeoning. I mean, they have a market value as of year-end 2021. They had a market value exceeding $3 trillion, up from $1.3 trillion in July of 2021. While some of that money is for investment purposes, obviously, there's going to be demand from people to spend these assets too, as the aforementioned surveys suggest. The appeal to merchants, other than having another payment option, obviously, is lower processing fees compared to interchange, but most importantly, perhaps, is the elimination of chargebacks.
And I would argue that even more important than that is the perception to the younger demographic that you are a cool business.
That you're a cool business. That's true. That's true.
Yeah.
And I interviewed a Verifone exec, who told me the firm is seeing interest across the board in terms of merchants, QSRs, big box stores, general retailers, even restaurants. Now, all of this is to say, we're still in the early days of crypto payments at the point of sale, but make no mistake, they're coming, they're here, really, and they're poised for growth.
Yeah, I love it. It's a topic that we're going to be talking a lot more about in 2022. It's something I'm really passionate about. I've done a ton of research, and rather than share all of that now, I love what you've provided. I think it's a very interesting time for crypto. I think, regardless of your opinion about crypto, I've never made a crypto purchase. I don't plan to make a crypto purchase this year.
Same here.
But regardless of your personal beliefs about it, the idea that a business should accept crypto, that is becoming much more interesting for our industry. And we'll be talking a lot about that in 2022 for sure. So thanks for sharing that, Patty.
Sure.
Thank you for listening to the Merchant Sales Podcast. Whether you are an industry veteran, processing executive, or just trying to learn about the payment space, we appreciate your time. The Merchant Sales Podcast is a joint production of greensheet.com and ccsalespro.com, and we hope you will tune in next week for more information and tips on building your merchant services business.